Welcome to the Real Estate Deep Dive with Paul D. Garrison from JP and Associate Realtors. You may have heard the Shakespearean quote, "A rose by any other name would smell the same." Well, in this case, it's a year by any other name may be the same. So the question is, are we returning to a more normal housing market? Is this year starting to shape up to be more of a normal year in the housing market? So let's start out giving you a quick breakdown of what we're seeing in the housing market from a national level. First off, the number of offers received is actually down. We were at a 5.5, an average of 5.5 offers received per house, but we're actually down to an average of 4.2 offers received per listing. Offers over asking is the second trend that we're seeing. These are actually decreasing as well. So the number of listings with offers that are over the asking price has dropped from 61% about a month ago to 55% now. So there are still two key things I want you to remember about this. One, this is again talking about the national housing market, so across the board nationally, not just locally. Locally, it's going to vary. The other key thing is that having 4.2 offers on average per listing and having 55% of listings getting offers over asking is still a very competitive market. So again, yes, we're seeing a softening, but it's not a huge decline. I just want to be sure we keep this within context here. So the third national trend that we're seeing is that sales are starting to moderate as well. They're starting to decline. Now we're going to talk about this in more detail further on in the video, but this is a key thing to focus in on. And the fourth national trend that we're starting to see is inventories are starting to rise. This is a good thing. It means more options for buyers. So let's take a closer look at each of these trends and how they're interrelated. Well, let's start out with this quote from Mark Fleming, the chief economist at First American. There's been a pickup in the inventory that we've been seeing recently, but it's not from a big increase in new listings, but rather a slowdown in the pace of sales. And remember that month's supply measures the inventory of sale relative to the pace of sales. So the same inventory, fewer sales, means more months supply. So there's a lot going on in this quote right here. So let's kind of break it down a little bit. So let's take a quick look at this chart. This is a chart that compares new listings in 2021, which is the green bars, comparing them to new listings in 2022 in the blue bars. So you're going to notice two things with this chart. Number one, you're going to notice that in 2022 that we actually have more new listings coming on, especially in April and May, but you're also going to notice that it actually is happening at a faster pace as well. Now you're also going to notice what he called out is this is not a huge uptick in inventory. So we're definitely not out of the woods as far as the inventory crunch goes. We're still in a very tight supply as far as homes go. So inventory or supply is very tight still as far as homes go, but we are starting to see an increase in that supply. Now, the other important part of that quote from Mark Fleming's was the pace of the home sales. And we're going to take a look at this chart here that is the seasonally adjusted annual rate in millions of home sales. So what the green bar is it's a projected number based off of where we have been so far in the year as of May. And it's comparing that against where what we did in the year 2021 and 2020. So if you've heard on previous deep dives, I've mentioned that obviously 2020 and 2021 were far from normal years. Between the pandemic and what's gone on in the housing market in 2021, those are not normal years. So we really have to look back at 2017, 18, and 19 as the closest normal years that we have references to. Now, those were very good years in the housing market, but they are our closest normal years to reference. So again, the green bar is a projected pace of home sales based off of the current rate that homes are selling so far this year. Now, if you compare that to the 2020 and 2021, it's definitely a slower pace than what we've been on in those years. But if you compare it to the 2017 to 19, we're actually on a very normal pace as far as home sales goes. So Lawrence Yun, the chief economist for NAR, really kind of summed it up. He says, the home sales have essentially returned to the levels seen in 2019. prior to the pandemic after 2 years of gangbuster performance. The other thing to keep in mind is 2017, 2018, 2019 were still strong performing years for the housing market. Very good years for the housing market. So we talked about growing inventory. So this chart actually shows active inventory counts and the fact that they are actually rising in 2022. So 2022 is the dark blue bar here going across the bottom. But the key thing to look at is, again, our normal years, or the years that we're used to. The 2017, 18, and 19 are across the top, the light blues and the gray lines going across the top. Now those follow kind of your normal trend where they start out a little bit lower in the year and you see inventory rise as you start to go into the summer months. They carry through and then they start to drop off as you go towards the end of the year. So you see that those years kind of follow the normal seasonality of the housing market. Then we take a look at 2020 and you can see when the pandemic hits, the inventory starts dropping off as things start to lock down and fewer people want to list their homes during the pandemic. And then you look at 2021 and inventory just has a tough time recovering. And that kind of takes us to where we are at the beginning of 2022. So in 2022, we're starting out with record low inventory levels, but we are starting to see that it's kind of that uptick in inventories. And we're seeing it start to follow the trend that we saw in the previous normal years of 2017 through 19. However, we still are at a record low levels. We have passed where we were in 2021, but it is still very, very low. So with that, let's take a quick look at this quote from Daniel Hale, the chief economist at Realtor.com. Active inventory continued to grow, rising 21% above 1 year ago. In other words, we're starting to add more options, but the market needs even more before home shoppers have a selection that's roughly equivalent to pre-pandemic housing market. So what does that mean? Well, we're still in a very tight supply area. So it's good that we have more inventory. There's a little bit more options for buyers, but supply is still very tight. So there's still continued pressure or upward pressure on prices. So it's still very much a seller's market out there. So we haven't really seen a balanced market since 2012, where there's about 6 to 8 months of inventory. However, we are seeing inventory continue to creep up. And a lot of that's due to, as we talked about, a decrease in buyer demand rather than an increase in supplies. So there is still that chance that we're creeping towards more of a balanced market. So this chart kind of highlights the recent updated forecast from Realtor.com as far as inventory levels go or what's expected, what they're forecasting as far as for 2022. So as inflation continues to kind of stick around and we've seen interest rates rise, they've actually updated their forecast from originally around 0.3%. They've increased that to now an estimated or forecasted 15% increase in inventory for the year. So what does that mean? Well, it means that there's going to be more choices on the market for buyers. So while it's still not going to be super easy to purchase a home, it's definitely not going to be a buyer's market. It does mean that there's going to be a little bit less competition on homes. It's going to be a little more as far as choices go, not quite as crazy as it has been over the last year or so. So I want to wrap up this deep dive with this quote from Mark Fleming, the chief economist at First American. We should start to see less competition, fewer bidding wars, and therefore less upward price pressure. In fact, a simple analysis shows that a 1 month increase in the month's supply results in a 3% decline in annualized house price growth. Our preliminary house price index is already showing moderation in house prices in April. So to summarize, there's going to be less competition, fewer bidding wars, and less upward price pressure, but there is still going to be upward price pressure. Most of the experts in the industry are still predicting anywhere from a 7 to 9% increase in home prices. So there is still going to be an increase in home prices. They're not predicting a crash or a fall. They are still predicting prices to go up. But it should be a little bit easier, still not easy, but a little bit easier than it has been to try and purchase a home. At least there'll be more choices in the market when trying to purchase a home. Many of the metrics and numbers in this presentation are based off of the national real estate market. However, local areas can vary. Please give me a call and we can discuss your situation. Have questions about your specific needs or location? Please contact me at 214-683-8188 or paul@pauldgarrison.com. Want more information about the housing market and related issues? Be sure and check out my blog at www.pauldgarrison.com. Thank you for your time. Please take a moment to visit our website at www.pauldgarrison.com.